I've sold so many of these books. Sébastien Page of T. Rowe Price gives me the quality Oriole seats that T. Rowe Price has in Baltimore. The book is Beyond Diversification, What Every Investor Needs to Know About Assets and Asset Allocation. And you get chapters like Correlation and Something About a Freezer and an Oven. This is by far and away the smartest book on what Peter Lynch called diversification I've ever seen. Sébastien Page joins us now, and I think it will Danoff over at Fortress Lynch up at Fidelity with 55% of his fund in 10 stocks. That's not the Sébastien Page way, is it?
No, it's not. And the thing about the freezer and the oven, Tom, is that investors too often look at average correlations over time. So right now in the markets, bonds and stocks can go down together. We've learned that in 22. But when investors do their strategic asset allocation studies, they just look back 10 years and average across all these different regimes. So my point is, there's a statistician who said, I have my head in the freezer and my feet in the oven, and on average, I feel great.
Right.
And that's kind of the mistake we make when we use long-term correlations.
But the problem, Sébastien, is most of our listeners and viewers have their head in NVIDIA and their feet in Microsoft. We've never, honestly, folks, we just did the solar eclipse.
Sébastien,
Phil Carre has never seen this, the late Phil Carre.
Sébastien, my daughter Hayden, she's on the way to carpool. She's in traffic right now. She owns the Mag 7, but you're talking about a broadening of equity market performance, right? The average stock, I believe, in U.S. equities is down, 13%? I mean, talk to us a little bit about this broadening. What's gonna drive performance here?
Yeah, you can use the same analogy for that question, right? It's a tale of two markets. If you go back to the end of 21, right, before the world fell apart and we had 550 basis points of hikes and 2 wars, and you ask, what will happen to stocks? No one really would have predicted the S&P being up 11%. However, MSCI, all country world index, equal weighted, is down 13% since then.
This is really important, and Doug Cass led on this down in Florida. He's mourning John Sterling retiring. And Mr. Cass had a chart this morning that showed the Standard & Poor's 483.
Right.
They're back to where they were, and I think it's early 23. And just as Mr. Page said, they're back really to where we were in 2021.
Well, Tom, it's been that lack of participation in value. And the question I think that Sébastien and I both have is what's going to drive people to, reach in their pockets, move out of growth and into value? What do you think is going to be that catalyst, Sébastien?
Yeah, that's a great question. And we are playing the broadening by overweighting value, but we're actually neutral between large and small stocks because small stocks have been so sensitive to higher rates, and we expect rates to stay higher than expectations. So why value? Because, Tom, things can be cheap, and they can be cheap for a long time, and you buy, and it's a trap. European stocks versus U.S. stocks. For the last 10 years, value stocks versus growth stocks. So you need to ask, what is the catalyst?
What is the catalyst for value to move?
So we look at 3 factors: macro, fundamentals, and sentiment. And to me, those are starting to align. Yeah. On the macro, you have rising oil prices and pressures on commodities in general. That favors value. Higher rates tend to favor value, although the case is not as clear-cut. But you can check the macro catalysts box.
Right.
On the fundamentals, is really interesting. If you look at a chart of year-over-year expected earnings growth, by the end of this year, it's expected that value stocks' earnings will actually be growing faster year over year than growth stocks. So you kind of have a fundamental catalyst. Our stock analysts, I'm an asset allocator, but I like to get input from stock analysts from the bottom up. They're talking to industrial CEOs, and they're hearing some optimism.